Hi, I'm Jack.
Hi, I'm Veronica.
Hi, I'm Kevin.
And together, we are the Research Maniacs. We are a group of investors that have won research competitions over the years with a wealth of investing experience. Today, we are going to present a stock to you, but before that, this is our disclaimer. Today, we are going to talk about one of my favorite stocks, okay? It's called Beijing Capital International Airport, BCIA for short. Its ticker symbol is 694 and can be found on the Hong Kong Stock Exchange. BCIA, some background, okay, of BCIA. It is the second busiest airport in the world and the busiest in the entirety of Asia. In 2017, it has 95 million passengers, and in 2018, this number grew to 100 million. So the number of passengers who use BCIA is increasing. In fact, it has increased beyond its capacity for the last 5 years. BCIA was built for only 82 million. Look at the blue arrow. Built for only 82 million. But now, in 2018, it has 100 million already. Okay, so this is something to keep in mind. Its design capacity is smaller than what it's already serving, so it's actually very crowded. BCIA has two main business segments, okay? Aeronautical and non-aeronautical. Aeronautical means flight-related revenue. This means things like your airplanes, your flights, your passenger service, your ground support service. The thing about it is it's down 23%. So why is it down 23%? Okay, because of three main reasons. In 2019, it's down 23% because of three main reasons. Firstly, they removed this thing called airport fees. Airport fees is something the airport charges passengers, but it's no longer able to count revenue because of regulations. Okay, they no longer allow it to be placed under aeronautical revenue. As such, it has caused to a lot of a big percentage of the drop. Airport fees used to be 40% of the revenue in 2017. So naturally, if you remove that component, it's going to fall. Flights have also been reduced because there is a new airport. This one is an airport called Daxing Airport. Daxing Airport is actually a new airport in Beijing, also in Beijing. And because it's a new airport, right, the government, or rather the parent company, the company that owns Beijing International Airport, also owns Daxing. They own the same company. So what happens is they are shifting some flights over to Daxing. And as such, when you shift flights across, the number of flights definitely decrease. So the aeronautical revenue also decrease. Okay. And the third thing is COVID-19. Okay, in late 2019, COVID-19 was already, they started blocking off travel in China. So it also affected the aeronautical revenue. Okay, so aeronautical revenue is very badly hit. And that is the reason why the stock is cheap. Later you will see why. Non-aeronautical revenue has increased. Okay, in 2019. In 2020 is going to be worse. Okay, because of all the COVID-19. I can't think of any travel industry stock that will go up in 2020. Okay, so in 2019 anyway, China is getting richer. People in China getting more regulated. So as such, people want to travel in and out of China more. So people tend to shop more in the airport. Okay, so things like your duty free, all that, they have increased non-aeronautical revenue by 13%. Okay, so as you can see from this slide we're going to talk about the modes of BCIA. BCIA has many modes, but and all of them, right? All of these modes are intangible assets. So what are these modes? Okay, firstly, it is state-owned. If it's state-owned, that means that the government owns 56% of it right now, and they will likely protect the airport using lots of government regulation. Second thing is the high barriers to entry of the airport industry. You can't just set up an airport beside Beijing Airport and say, I want to start an airport. It's not possible. So airports take years and years to plan. The latest one is Daxing Airport. It's been planned since 2001, so 20 years. So there's no new airports planned in Beijing in the coming future. So you can be sure that there'll be no new airports in the coming few years. The only one is really Daxing Airport. All right. Third thing, okay, it is an evergreen industry. Airports are in an evergreen industry because of globalization, pushed by two things: tourism, which I don't see going away soon, moment the COVID ends, tourism, how many of your friends want to go overseas and travel again? Well, you will know. Okay, tourism. Second thing is globalization. Your people will need to ship resources overseas. So they are going to have to, they still need planes, they still need planes everywhere. So that is an evergreen industry. I think the airport is in an evergreen industry. And lastly, location. If you want to travel to Beijing, it makes sense to go to a Beijing airport. You can choose your airline, like which airline you want to fly to Beijing. You don't want to take SIA, you can take Malaysian Airlines. Okay, maybe don't take Malaysian Airlines. Malaysian Airlines can go missing. Right? You can disappear somewhere. Don't take Malaysian Airlines. Take China Airways. Okay, you don't take Singapore Airlines, take China Airways. But you cannot choose which airport to land. Right? If you want to go to Beijing, it doesn't make sense to go to Shanghai and take a train. It makes sense to go to Beijing, right? So the location is a mode as well. Airports will be used for many, many more years to come. So that's why it will be a strong company. It won't go anywhere. Airports will not collapse. On top of its huge moats, okay, BCIA has an A-grade balance sheet. So A-grade balance sheet basically means they meet all our criteria for being an investable company. It has good revenue, net income, debt, ROE, payout ratio, and etc. If you don't know what these numbers are, because I don't want to dwell too much into it, but if you don't know what these numbers are, okay, please put your name in the comments below. We'll reach out to you and we'll ask you to come for our course. Okay? So if you don't know what these numbers are, you shouldn't be investing. It's as simple as that. Alright? So this shows that it is a high quality company. Okay? And not to mention future growth that is expected. Air traffic is expected to double, okay, by 2036. And because of the rising middle class in China, okay, it is likely that a lot of this air traffic will come from China itself. Asia has 60% of the global population, but Asia only accounts for 36% of total air traffic. That means a lot of the Asians are not flying yet. Today, only 7% of the Chinese have passports, and this number is soon to change very rapidly due to development in China. But of course, okay, it has a good mode, it has good numbers, it has good future growth. But BCIA has risk, and that the first risk is the risk of China. You never really know in China, so you better portfolio size. For me, I'm only willing to put in 8% of my portfolio into BCIA. You might also want to consider the following things, okay? BCIA is state-owned. That means a fraud case will reflect very poorly on the Chinese government. Secondly, it is not a penny stock. It is $23 billion market cap. So it's actually a very big company. Thirdly, it has 20 years in the stock market without any fraud cases. So I'm not saying it's impossible for fraud to happen, but what I'm saying is it is less likely with these factors. BCIA is also, because it's state-owned, right, 56% state-owned, it is likely it will prioritize the Chinese national interest ahead of shareholder interest. What do I mean by this? I mean that last year, for example, they actually bought a very expensive car park from the parent company. Is it overpriced? Well, I don't know. Okay, but it could be. It also shows how the parent company can use profits from BCIA to fund other national interests. For example, Daxing International Airport. This is the reason why BCIA's price is so cheap right now. It's because there is a second airport newly built in China, ready last year, 2019. In fact, now, today, some flights of Daxing Airport, right, is already taken from BCIA already. But it is only normal, okay, because, okay, both the parent company owns both Daxing Airport. The parent company owns also BCIA. The parent company's name is actually Beijing Capital Company, okay. So they actually own both airports, and it is likely in the long run these airports will not compete. Okay, they're not going to compete with each other. They're more likely going to collaborate with each other, but they're owned by the same entity. In fact, they have one dream. It's called One City, Two Airports. Okay, it's a movement. Secondly, right, most international flights remain in BCIA. international flights having richer people on board, and they fly longer distances, so more fees for the airport. BCIA, okay, some notes, okay. If you look at this chart, right, you'll see that BCIA is the flights in BCIA will decrease from 2019 to 2021, and 2021 after 2021 it will start increasing again. BCIA has been operating beyond capacity constraint for the last 5 years, so this shouldn't affect it so much. In the long term, it will not be an issue because not only will air travel double, the Chinese will also be richer. By 2021 onwards, it will more or less return to normalcy. The last risk I want to talk about is the risk of COVID-19. COVID-19 has affected the entire world and is expected to decrease passenger air travel by at least 50%. However, I believe this is very short term. If you just look through Facebook, you will understand that many people can't wait to go back on a holiday. Am I right? Just like a bubble tea store, moment the government allow, right? Wow, everybody gonna go on holiday. Okay, that's my opinion lah. So it's short term, and this short term damage, okay, is probably already priced in. If you look at this chart, people are expecting the airport revenue, airport profit to drop by at least 15 times, from 2 billion to become 151 million only. Okay, it's able to plunge. Okay, so people already sold. People who want to get out of the company already sold their shares. So that's why the price is now very, very, very cheap. So let's talk about valuation. Okay, this is my favorite part. We know that it's a good company, but we know nothing is going right for it. Okay, there's so many problems. There's a new airport. There is problems with the COVID-19. The airport fees have dropped. People are very pessimistic about this company. So what happens? Okay, the current price of BCIA is about $5. I did an intrinsic value calculation. This is my DCF calculator. Okay, if you're one of my students, you will have this calculator. Okay, if you're not, then too bad. Okay, that's your problem. Okay, so I calculated that it's worth 7.5. Intrinsic value 7.5. That's my value of it. And now it's only $5, so there's a 50% upside. And this 7.5, by the way, is in yuan, not Hong Kong dollars. If you convert to Hong Kong dollars, it'll be $8 plus. Okay, so it's actually quite cheap. Not only that, this company has profit, right? This also has a very good price to book value. So we know that at asset rise, buying the asset valuation, we want to buy a company when the price to book is less than 0.8. This is almost 0.8. So it is very, very good price. Even if the whole airport they sell away, collapse and sell away, you still make money. For every 0.8 you put in, you get $1 back. The PE of this airport is super low. It is now 7 compared to the airport average PE of 31. If you look at it this way, due to PE, right, you're going to see that it has so much upside, at least a 4 times upside. 4x, ability to 4x over the long term. When a company makes profit, there's only 3 things they can do. They reinvest in themselves, but this is an airport. It's unlikely to reinvest much. You can't build 20 terminals, right? You can only do 2 things. Either you buy back your shares or you increase your dividend. BCIA has already stated that they will pay the dividend of at least 45% of net profit. So the dividends will be strong. If the dividend rise because the profit has gone up over the next few years, the profit is going to go up and they increase the dividends, what will happen? The share price will increase. And that means that we get to keep a lot. That's my thesis of BCIA. I hope you enjoyed it. I have actually purchased this already. So please, if you want to buy, okay, this is not a stock recommendation. Please do your own due diligence. I'm just saying that I think this is a good stock. All right, guys? Please tell me what you think.
Okay, thanks, Jet, for the presentation. So now I would like to give my comments regarding this stock, whether this company, in my personal opinion, is yes or no to invest. So my personal opinion is current price, the BCIA looks very attractive. However, the main concern on not to invest in this company is first, because of the ownership of more than 50%, which means that the controlling company has more benefit towards the benefit of other shareholders. And second thing is parent company, which own multiple businesses, can also potentially make decision which is not in favor of BCIA, and this what we say is potential conflict of interest. So, but look at the price that is very depressed and currently, but the future long-term growth, the company is still there, then I will still say yes. However, portfolio sizing for me is very important, considering for all investment will always carry risk. How about you, Kevin?
Okay, thank you. So for me, I have two concerns about this stock. The first one is the COVID-19. For me personally, I think that COVID-19 is changing the travel industry. For the example, like people who like usually travel for like business, they might not want to take flight for business again, because right now we know that it is okay to use Zoom. And then the second reason is because of this. I am afraid that this Beijing Capital International Airport will become like all airport, and eventually most flight, most store will be in the new airport, because this new airport is like better and they have the latest technology. So and then this concern is like recently I saw this article that mentioning that, hey, actually because of this new airport, finally they can have time and space to redesign the airport. And for me, it is a good news. That means that this old airport will like keep improving, so they can catch up with the new airport. So for me, that was my concern. And for me personally, if you ask me whether I will buy it now at the current price, even though it is right now, it is 30% margin of safety, I would like to have more. So for me personally, the price that I'm going to enter is below 5 Hong Kong dollar. So in conclusion, with everything, Jack, he definitely say yes because he has this stock, and Veronica also yes buy, but have not buy. Okay, for me also yes. And then what is the acceptable price? So based on our calculation, it is 6.5 Hong Kong dollar. So 6.5 Hong Kong dollar is with 20% margin of safety. So that's it, guys. So if you think that this is very helpful, okay, anyway, do you guys have anything to share, like maybe 1 minute or what? Just very fast one.
Okay, guys, don't forget this is a very long-term investment. Okay, for me, I am prepared to keep my money in there for 5 to 10 years. Okay, before it reach intrinsic value. So unless you have the patience and the capacity to do so, this stock might not be for you, as the COVID-19 crisis might affect the travel industry for a while, right?
Okay, so
Yeah. And additionally, that this company also paying dividend, so this is one other another plus point for this company.
okay, Thank you, Jack. Thank you, Veronica. And this is the end of our presentation. And guys, if you like this presentation, please do like, and if you have any question, you can comment on. And then let's say that after watching this video, you want to learn more about investing, just do let us know. Do let us know via comment. So see you in the next video.